Good morning and welcome to the B.F. Anderson Technical Report for January the 10th. Let's get into the charts. Now I have Amy here with me, my co-manager here at B.F. Anderson & Company, and we're just going to have a little conversation. But the main thing to realize right now that's going on with the market is we are starting to see what could be the very beginnings of a bottoming process. Now remember, this is not a point in time, this is a process. So if we really look at what drove the market down so dramatically on Christmas, right at the end of the year, Christmas Eve specifically, there just weren't any buyers in December. We had 140 hedge funds close. We had $100 billion come out of mutual funds over the last 5 weeks. So basically what has happened here is the market hit a vacuum of no buyers and lots of sellers, and also throw in the fact that we had tax loss selling at the end. But we're starting to see some improvement here. You can see that we got the dramatic drop here on the 24th, started to rebuild. We're starting to see volume that is, we're seeing more up days than down days, and so we're seeing an improvement in the NASDAQ. Now on a weekly basis, we are seeing a little bit of improvement here, but we're still below the 35-week moving average, and we're getting below average volume on the upside. So it's just really a good time right now to continue to look for opportunities and maybe do some nibbling, but keep it light. Now this indicator here, Amy, I know I've talked to you a lot about this, and I think you could really kind of share with everybody what we're saying here.
Well, this chart right here is the high and low index, which we do look at. It kind of gives us a reading of what the market fear and greed type feelings are.
Well, it is somewhat of a fear and greed, but it's more what we call breadth, and it's an internal indicator. Because think about it, if you're making a lot of new highs, that's really indicative of a very healthy market.
Right.
So if you get down to real low readings, we're going to be in what we would think would be somewhat unhealthy and probably a market that should be avoided.
More bearish, right.
But the readings we got here back at the end of the year were absolutely record-breaking.
Right.
Which means there weren't any highs.
And it's pretty rare. We would say that we've only seen these readings below, and it goes all the way from 1 to 95 is the readings. And when it's below 3, it's very, very rare. So January 2016, October 2008, September 1998, and October 1990, and October 1987 were when we saw these very rare readings.
Well, and also these readings did come at market bottoms. So the possibility of a market bottom, according to what we're seeing, yeah, it looks like it. It really does. It looks like we have made a low. Now,
but we are seeing some upward movement away from that fearful place.
Right. Well, we haven't gotten to fear greed index yet.
Right.
So we'll get to that in a second. But this is another type of way to look at the internals of the market. In other words, if you're getting a bunch of new lows, the internals of the market are going to be negative. Well, here's the good news. Yesterday, we only had 3 new lows. The day before that, we only had 10 new lows. You can see here we are starting to stabilize below 40 new lows a day, which is the magic number. So this internal reading is saying that the new lows are starting to dry up, which is very positive. Now, I think another positive here, and this is kind of a change in character for the market. When you're dealing with growth stocks, which means that you're looking for companies that have a bright future, it requires kind of an animal spirits, risk-on type of thinking in the marketplace. Well, at the small caps, which is probably the riskiest portion of the equity markets, if they're rallying, it's telling you that confidence is really starting to kind of come in. So are we seeing a change in character here where we're now seeing the small caps get back above the lower moving average, and in fact it's very close to the upper moving average. The small caps led us into this correction. It's kind of looking like they're going to lead us out of it.
Right.
Now this indicator here, well, it's an index. It's a long-term look at the market. Now Amy knows about Louise Yamada, and basically what we're looking at here is some monthly moving averages where you pay attention to death crosses and you pay attention to golden crosses. And we're still on a golden cross, but as you can see, the index continues to stay below both of the moving averages. Boy, we really would like to see this particular index get back above, say, 2,800. That would be very positive. Now, Amy, here we go. This is your fear greed. And so you kind of have to ask the question, Amy, do you want to really get aggressive when everybody else is aggressive?
No. You want to do things when things are not apparent. As Warren Buffett always said, be fearful when others are greedy and be greedy when others are fearful.
Enough said.
Right.
Perfect explanation. So we're seeing, we got to this extreme fear reading. We're rapidly moving just into fear. And if you look at your report this morning, you'll see that the sentiment readings are now in the fear range. So we're coming out of an extreme fear condition and moving hopefully back to a normal level. Now, one other area that we're paying attention to is the financial stocks, which would be the banks. Really not seeing, would be a negative. We're really not seeing the kind of strength of the financials that we would like to see. But that has a lot to do with interest rates. Let's see what happens. Now, let's get into the top five. Now, one thing about the top five this morning is I really don't want to get into a whole lot of what these companies do. I really want you just to pay attention to what the industry groups are. Software, Alteryx, stock recently hit an all-time new high. Now, we do own this stock. I have to disclose that. And the stock is acting really well. Now, here we go. Now, here's a completely different situation. Yeah. Now, Amy, do you have any Crocs? Do you have Crocs?
Unfortunately, I do.
I mean, they're basically rubber shoes.
It's basically, somewhat of an unattractive but very functional shoe that most people use for housework.
And, who would think that this would be a really hot situation? But the company must be doing extraordinarily well. Again, we have not bought the stock. We're just looking at it. It's on our watch list. But a lot of people have these shoes. I mean, I
think you're going to see a lot of interesting movement in very niche sectors, such as retail, but very specific types of retail versus Dillard's or Sears or JCPenney.
And everybody's missing their numbers. So you're right. It's going to be unique retail that people are making their numbers.
Right.
Now here we go. This is Altazan. That's another software company. And then here we have Twilio, which we do own. We own this position. Recently hit an all-time new high, again, software. And then we have another stock that we own here called Workday, and that's software. So basically what I'm saying about the top five is it's dominated by software. So you should really be paying attention to the software stocks for your portfolio.
Right. And so I would say, just on a closing note, we've kind of learned over time that the bigger mistakes people make after a very volatile, choppy market, which we did see last quarter, is that, you're not making the decision on becoming bullish again because your psyche has been so battered by what your portfolio has had to endure. However, the biggest mistakes that any investor can make is not having a bullish strategy along with a bearish strategy. So we would say don't be so fearful and heavy and just want to sleep well at night, because if you miss these upward movements and these pockets of opportunity, you will be making a huge detriment to your portfolio in the future.
We really could make the argument that this is the best buying opportunity since 2009.
Right, and people still aren't really talking about it, which is kind of the secret sauce to this industry.
Well, I think it's critical, though, that the market hold its December lows. If it breaks below those December lows, I kind of think all bets are off. But we'll have to see. So thank you, Amy. I appreciate you helping me
today.
Of
course. Good morning. Bye, everybody.